I've made major changes to my portfolio over the last month, selling off 14 of my holdings and making a massive amount of buys. Throughout this video, I'll be updating you on my dividend stock portfolio, sharing my dividend income, and discussing all the major additions and subtractions I've made in this time. My name is Zach, and you should leave a like and subscribe to the channel if you enjoy the video. The purpose of me doing these monthly updates is to show the progression of my portfolio over time. These updates not only help hold myself accountable, but I hope can be a source of motivation for others as well. With that said, let's dive into the numbers. So as you can see in this table, since May I've gone from $32,939 to $35,278 invested by the end of September. Since my last update, I've made major changes as I've had one of my largest buying periods and I've sold out of a number of positions as well. I'll be going into greater depth about these transactions later in the video. During this same time, we can see that my dividend yield on cost increased from 4.58 to 5.19%, and my compound dividend yield increased from 4.61 to 5.29%. These significant yield increases are from buying high-yield stocks and selling some which had cut their dividend. The differential between the dividend yield and compounded dividend yield is now 0.1%. Over time, we will see this differential increase significantly as my dividends keep snowballing and the power of compounding takes effect. In this chart, you can see how the value of my dividend portfolio has changed over time. My current value is $36,583. Through most of September, the market has seen a significant drop-off, which has created many buying opportunities. In this next chart, you can see my dividend income to date. In August, I received $71.12 in dividends. This is down from July, but expected as it was my lowest dividend month in the quarterly cycle. In September, I will have my highest month of dividend income thus far, and they've already been rolling in, as you've seen if you follow me on Twitter. Here, you can see my cost allocation by sector. Energy, communication services, and real estate are my three largest sectors at 20.1%, 14%, and 13.5% respectively. My lowest sectors are utilities at 0.9% and technology at 3.79%. My main goal here is to increase my exposure to technology. I would say that I've become overexposed to energy, but that's largely because of the deep discount among these stocks right now, and I can't help myself from buying more at these low prices. However, I don't think this will be a long-term problem because over time I'll be buying more stocks from other sectors of the economy as they present value. I wouldn't be surprised at all if over the next year energy drops to be second or third in my portfolio. Speaking of diversification, I've made major changes to my portfolio as a whole. Since my last update, I've trimmed my portfolio from 50 to 36 holdings. I've been mulling over this decision for a long time, but after listening to a clip of Warren Buffett and Charlie Munger discussing diversification, it changed my perspective.
We think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that is a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses that are understandable to a single human being in all likelihood, and to have some super wonderful business and then put money in number 30 or 35 on your list of attractiveness and forego putting more money into number 1 just strikes Charlie and me as madness. And it's conventional practice, and it may, if all you have to achieve is average, it may preserve your job, but it's a confession in our view that you don't really understand the businesses that you own. On a personal portfolio basis, I own one stock, but it's a business I know, and it leaves me very comfortable. So, do I need to own 28 stocks in order to, have proper diversification? It'd be nonsense. And within Berkshire, I could pick out 3 of our businesses, and I would be very happy if they were the only businesses we owned and I had all my money in Berkshire. Now, I love it, the fact that we can find more than that and that we keep adding to it. But 3 wonderful businesses is more than you need in this life to do very well. And the average the average person isn't going to run into that. I mean, if you look at how the fortunes were built in this country, they weren't built out of a portfolio of 50 companies. They were built by someone who identified with a wonderful business. Coca-Cola is a great example. A lot of fortunes have been built on that. And there aren't 50 Coca-Colas. There aren't 20. If there were, it'd be fine. We could all go out and diversify like crazy among that group and get results that would be equal to owning the really wonderful one. But you're not going to find it. And the truth is, you don't need it. I mean, if you have a really wonderful business, is very well protected against the vicissitudes of the economy over time and the competition. I mean, we're talking about businesses that are resistant to effective competition, and 3 of those will be better than 100 average businesses, and they'll be safer, incidentally. I mean, there is less risk in owning 3 easy to identify wonderful businesses than there is in owning 50 well-known big businesses. And it's amazing what has been taught over the years in finance classes about that. But I can assure you that I would rather pick, if I had to bet the next 30 years on the fortunes of my family that would be dependent upon the income from a given group of businesses, I would rather pick 3 businesses from those we own than own a diversified group of 50. Charlie?
Yeah, what he's saying is that much of what is taught in modern corporate finance courses is twaddle.
If you find 3 wonderful businesses in your life, you'll get very rich. And if you understand them, bad things aren't going to happen to those 3. I mean, that's the characteristic of it.
By the way, maybe that's the reason there's so much dementia. If you believe what Warren said, you could teach the whole course in about a week.
Yeah.
Going forward, I want to make sure that I have a deep understanding of every stock I own. This is why I love doing the stock review videos, because it really helps add to my understanding of businesses. When starting my dividend portfolio, I found that I was too loose with picking up stocks that I hadn't done enough research on, only buying them because they were a dividend aristocrat and at a good value. The more and more I learn, I expect I'll condense my portfolio even more into stocks I identify as my core winners. My mental framework for selling a stock is if I can't explain to myself why I want to own it in the long term, then I'm going to sell. Also, if I can't give a detailed reason why I want to keep that holding instead of putting the money into one of my identified winners, then I'm going to sell out and put that money into my winners. With that said, let's go over all the holdings I sold. In total, I got rid of 14 positions for a total of $2,697.19. This included Occidental Petroleum and OXYWS, General Electric, Tanger Factory Outlets, Centerpoint Energy, Mercury General, Meredith Corporation, the Waco Group, Tootsie Roll Industries, People's United Financial, Emerson Electric, Helmerich & Payne, Iron Mountain, and Cisco Systems. With all of these, I could not answer the question as to why I would want to keep money in these stocks, rather than allocate it to companies like AT&T and ExxonMobil, which are high yield, or companies like Disney, Apple, or Microsoft, which I want to own forever. I will continue re-examining my portfolio and using this framework to condense into companies I view as winners. Alright, so now let's get into the massive buys since the last update. This was my largest month of buying in a long time, and in total I invested $5,316.78. I purchased 72 shares of AT&T at an average cost of $29.08, giving it a 7.15% starting dividend yield. This brings my overall position in AT&T to 124.65 shares at a cost per share of $29.09 and a compounded yield of 7.19%. As you've likely noticed from other videos, I'm a big fan of AT&T and think it's a great dividend stock to build a portfolio around. I bought 34 shares of ExxonMobil at an average cost of $38.08, giving it a 9.14% starting yield. This brings my overall position in ExxonMobil to 81.84 shares at a cost per share of $46.46 and a compounded dividend yield of 7.66%. I've been looking to scoop up large amounts of Exxon at this time because it's so lowly valued, and if they hold their dividend, then this will have incredible potential for cash flow and even capital appreciation in the long run. I plan on making a video analyzing whether they're going to keep their dividend, so let me know in the comments if you'd be interested in that. Additionally, I bought 12 shares of Walgreens at an average cost of $36.75, giving it a 5.09% dividend yield. This brings my overall position to 24.32 shares at a cost per share of $41.67 and a compounded yield of 4.45%. Also, I bought 4 shares of Apple at an average cost of $172.22, giving it a 0.7% starting dividend yield. This represents my entire Apple position thus far. I bought 3 shares of the Walt Disney Company at an average cost of $126.45, giving it a 1.39% starting yield. This brings my total Disney position to 12.09 shares at a cost per share of $104.58 and a compounded dividend yield of 1.7%. I bought 2 more shares of Federal Realty Investment Trust at an average cost of $75.23, giving it a 5.64% starting yield. I now have 36.45 shares of FRT at an average cost of $78 and a compounded yield of 5.45%. I bought 2 shares of PepsiCo at an average cost of $130.12, giving it a 3.14% yield, bringing my overall position to 4 shares at a cost per share of $124.31 and a compounded yield of 3.29%. Additionally, I bought 1 share of Consolidated Edison at $70.05 and a 4.37% starting yield, bringing my overall position to 5.04 shares at a cost per share of $71.28 and compounded yield of 4.33%. Finally, I bought 1 share of Chevron at $81.24 and a starting yield of 6.35%, bringing my overall position to 15.45 shares at a cost per share of $99.65 and a compounded yield of 5.33%. So those were all my buys since my last update, and I've made stock reviews on many of these companies, so check them out if you're interested in why I'm buying them. That was a lot of buys for me, and it looks like I'm going to need to tighten the purse strings for a little while now. To wrap up the video, I thought I'd share some of the stocks currently on my watch list. AT&T, ExxonMobil, Disney, Apple, PepsiCo, Coca-Cola, McDonald's, Microsoft, 3M, and Walgreens are just some of the companies I'll be buying if they're at a good value. Thank you for watching Dividend Data. I'd greatly appreciate it if you could leave a like and subscribe to the channel. If you follow me on Twitter, link in the description, you can get real-time updates of my buys and dividends coming in. You can support the channel on Patreon and be a part of making these videos happen. The link is in the description. Please leave a comment below, and thank you for watching.